These signals are provided for educational purposes only and should not be treated as investment advice.
This is Huskins with the Forex Training Professionals reporting on the trade which we issued for education purposes only in the live trading room. Um, we issued a trade to go long on the GBP JPY from 128.80 plus spread with a 60 pip stop and a 200 pip target. This video would provide an explanation for why we chose those levels. Uh, we started the day looking at the currency meter. The currency meter showed the pound as well as the Japanese yen to be the key drivers in the market at that particular time, and it was prudent to look at confluence of events on the GBP JPY chart because the rest of the currencies were basically followers. They were not leaders on what's happening, and just the GBP and JPY were the leading currencies. We drew the GBP JPY chart, and one thing which stood up was from this non-farm payroll high to this uh, the over the weekend open. We drew line and we extended it into the future, a Fibonacci extension level, and we get a price point of 128.77, which is significant because it was a all-time, not an all-time, but for a significant number of days, it had been the low point on the GBP JPY. We started doing a top-down analysis after that, and we soon realized that the 128.77 was in fact a very significant level over the last three or at least a couple of months, and even in May. It was a very significant level. So we noted that on the 128.77 level, we noted that on a 5-minute chart. We worked upwards to a 4-hour chart, and on a 4-hour chart, we saw a 1, 2, 3 top formation, sorry, a 1 2 3 bottom formation, and we had broken the 1 2 3 bottom formation at the 130.91 level. So technically, on the 4-hour chart, we might be seeing a reversal formation, and any price we get better than 130.91 would be a decent price for entry. We went ahead and looked at the 60-minute chart. The 60-minute chart also had another 1 2 3 formation, and not only that, we this is the non-farm payroll significant high, um, but we had a 1 2 3 formation before the non-farm payroll news event. While as in the 4-hour chart, if you notice that we had a 1 2 3 breakout only during the non-farm payroll news event, and a breakout during news is not very significant. A breakout during for technical reasons is very significant, and that is the reason why the 60-minute time frame breakout was more important than the breakout on the 4-hour chart. Um, so we noted the price level of 130.10, and the low of the bullish engulfing candle at 128.81. We then went on to look at the 15-minute time frame chart. The 15-minute time frame chart also we drew an extension level of the most significant price points, and the extension level of this entire move from this high to this low compared seen into the future from this high to what would be a low if the same measured move were to be realized, came up to be 128.75. That is the reason why the 128.75 to 81 level was significant, and we chose to go long on the GBP JPY at uh, 128.80 plus spread. Now, to for take profit levels, we noted on the 4-hour chart that even if we have a longer term downtrend, to keep the integrity of the downtrend um, intact, if we exit before 130.91, it would yet keep the integrity of the longer term time frame intact, and that is even if for matter the price does not want to reverse its direction and move upwards. If we choose to exit our trade before 130.991 level, it yet holds good for even a downtrend on the bigger time frame charts, and that's why we chose that level as our take profit level. So to reiterate the trade, we are attempting to go long from 128.80 with a target of about 200 pips and a stop loss of about 60 pips. I hope you all enjoyed the reasoning behind this. Join me in the live trading room for further trades such as this. Thank you.